The information provided in this video is for educational and informational purpose only. It is not intended as investment advice or recommendation to buy or sell any financial instrument. All trades involving risk, and you should only trade with money you can afford to lose. I'm not a licensed financial advisor. The trades or strategies shown are my own opinions, are shared purely for transparency and learning purposes only. So I have a friend that's trading Apple, and he asked me to go through Apple for him. So we're gonna try something different today. Can't say I'm that experienced with it, but I'm gonna take it as a stock like any other stock. They have different movements and different personalities, so to speak. That's how I kind of like look at things. So let's start at the day time frame. And I'm gonna leave that fib on, and I'll talk about why I have that on later. And on a day, there's a lot of validity in there. Uh, So I'm thinking at some point that has to be taken, and that's probably going to be one of my day lines. So I'll bring this line, since I already have the fib at that level, down here, and we'll call that the day. So that's our day line. I guess we could put another one here. I'm trying to stay away from having tons of lines because I'm actually getting used to the supply and demand zone. So we got that. So let's go down to the 4 hour. So the 4 hour is actually, and actually there's my friend right there. He did his own little review on it. Awesome. And we could probably compare after this. Okay, so as you can see, it looks like a double bottom is forming, but there's a lot of wicks in here, which we like to see. And the fib that I dragged kind of created that upward movement. As you can see, price is going upward, right? And it's kind of like touched here and then knocked itself back down. As you can see, there's numerous touches around this guy here. And I created what is called a demand zone down here, because if you can see on the 4 hour, this demand zone, that red candle and that green, and then it takes off. So it bounces off there. And what makes this a great demand zone, we haven't had too much interaction in that zone. We could pull it back a little bit. Probably gonna totally mess this up, but we keep pulling the demand zone back. We can see it touches it and then it shoots off from there. And even if we go back here, we can see this is prices. As you can see, it's reacting to this demand zone pretty strongly, right? But the catch with this is you have to watch it. The more touches, the less bounce it kind of loses. It's like a trampoline without kind of like the cords in the trampoline are getting worn down, so it doesn't give you as much bounce as possible before. As you can see right here, it bounces, it goes straight up, bounces, goes straight up. This bounce is not as high as the other ones, so it might be losing that level of bounce. But what I see happening is price going beyond this, so it could come back down. Because the other thing with these supply zones, or yeah, the other thing with these supply zones, you don't want price to come straight back down. You kind of want it to, let's see if I can show you. So once it price goes up, it goes all the way up here. I'm not going to keep zooming all the way up, but as you can see, it goes way around the world and then comes back down. That's a great bounce. That's a great bounce. You don't want to go straight up, straight down. So with that, I think price is going to, is that what? Let's take a look at the after hour sessions, because that tells you where it's at right now. And it's already at my fib. So I think what it's going to do it's going to try to get to this mark right here, which is 258. And that's going to probably be my first take profit. And I use horizontal raise to make my take profits. And that's TP1. And I'll take it off of that. What I usually do is I draw green lines and I put X's in there. Put my signature bull in there. And that's TP1 for me. So my next take profit will be around 260. And that is my TP2. So if price comes back down, which I think it will, even though it's crossing, it is crossing and going up, I think it's going to go back down. And if it does, I have it at this line at 251. And I use red, sorry. Helps if I spell today, TP2. Throwing the signature bear. So that's 1 and 2. I'm going to put as TP2. And we are going to change those line colors because that's not what we want. I want to just look at it at a glance and know from the red that that's a put or a call. Go down to the 30 minutes and see if we can see anything else. So within the 30 minutes, that supply zone's still good within there. But I see another supply zone, which is around that line. But I'm going to leave it. I don't know if I'm going to really go through, see if there's another supply zone that kind of, or some type of clue that references that. But I don't really see anything off the rip, but I guess I can put like a little one just to remind me that there's something there. Because yeah, I guess I can. But it's just it's the supply zone or demand zone, sorry. So in there, I know I got a lot going on. And I will explain to you why I have the Fibonacci on. So the Fibonacci is all these, like you see percentages on the right-hand side. And what it does for me is it tells me if this move goes up, right, where it's at that 0, and I probably have to change it because I have it on a put. Let's take the reverse off, right? So it's at 100%. If it comes down to 60%, right, we're looking for it to either shoot back up, or even if it comes down to 50%, 50%, 61%, not bad. If it's going past that, we're probably going in a different direction, right? And at that point, we can see there's like a supply zone here and a supply zone, demand zone here and a demand zone here. Sorry, I gotta get those together. So it either way, like if it passes through here, you gotta be aware of a bounce back up. But if it gets through these two guys, we're probably going down. So that's what I have for you today.